where the permanent buy down makes sense is if you plan on holding on to the property for more than 5 years. And you have your permanent buy downs, which a lot of builders right now, they're getting really competitive on this. And so this would also be called a long-term buy down. A permanent interest rate buy down is when the buyer pays upfront fees. These are called discount points, and they lower the interest rate for the entire life of the loan, not just temporary, like a 2-1. How these discount points work: 1 point equals 1% of the loan amount. Typically reduces the rate by about a quarter point, 0.25%. Now, where the permanent buy down makes sense is if you plan on holding on to the property for more than 5 years. If the rates are relatively high, this is another thing that makes sense in my professional opinion. Yes, we have some potential volatility with what's going on overseas, but I think 5.5% is about the lowest that we will probably see them get for the foreseeable future. If you want long-term payment stability, it is another thing to think about, keeping your monthly expenses as low as possible. This helps out too, because when taxes and insurance goes up, you are still going to be better off. Another way that this is beneficial is if you look at what you're going to pay over the span of the life of the loan. If you've never looked at an amortization table, it is kind of gross on what you actually pay on the house over the course of the life of that loan. This is why people try to pay off their mortgage as quickly as possible. You save money on the interest. The difference with real estate, as far as history has been written so far, is that it appreciates. You'll get that money back and potentially even double it. So do that with a Ford F-150.